So in essence, we just borrow the money in a bond, pay 0.75% interest for about 5 years. And then we took that $650 million and we bought Bitcoin with it. So we're kind of borrowing money less than 1% interest. Now, Bitcoin over the last 4 years has been going up about 40 to 50%, 45% compounded. So we're borrowing money less than 1%. We're loaning it out, or we're buying Bitcoin at 40% plus. And because it's no recourse unsecured debt, the volatility doesn't matter that much because it's not going to come due until the very end of the term. So we did that. Bitcoin rallied, our stock went up to $1,000 a share.
Great.
And you can imagine what we thought. We thought, let's go do it again. So we went and we tried to do a $600 million. We said, we'll ask for $600 million this time. But the volatility of the stock had taken off, and people that buy convertible bonds want to buy a bond from a company with a very volatile stock. And that's because they're buying the bond and sometimes they're selling the volatility, and the amount of yield they get is a function of the volatility. So a highly volatile stock might be the equivalent of getting paid 40 or 50% interest. They're just selling the options. Everybody that bought that bond had like doubled their money. And so they all came back and bought the next bond. At the end of the process, it was $1.05 billion bond, and the coupon was 0. So we paid 0% interest. And basically it was $1 billion of money for free, unsecured. So it was $1 billion for free for 6 years. And you can guess what we did with the money. We bought Bitcoin. And we said, we have a Bitcoin strategy. We're going to keep buying and holding Bitcoin. All along the way, every quarter, we always asked, how can we buy more Bitcoin? And then at one point, the stock rallied and Bitcoin rallied, and we sold $1 billion worth of stock at like $700 or $800 a share. When we were selling the stock, at a premium to the underlying Bitcoin. So we would sell $1 billion of equity, and then we would buy $1 billion in Bitcoin. And we eventually got to the fourth quarter of 2023, and there we did about a $1.2 billion worth of equity issuances at a premium and bought Bitcoin. And our shareholders loved it because they realized we're basically just, we're giving them a Bitcoin dividend, tax deferred, and they're accreting Bitcoin per share. If we sell the stock when it's trading at a premium to Bitcoin, then we're just capturing that for our shareholders. And people thought, oh, well, when the ETFs are approved, it may not be good for you because you're trading at a premium. But in fact, the opposite was true, because we have a lot of Bitcoin and we're an operating company. So what you can do, or what MicroStrategy can do that an ETF can't do, is you can borrow against our stock. It's marginable. We can leverage the stock. You can option the stock. We have options, puts and calls. You can short via puts. You can go long via calls. And you can buy our debt or trade it, and we can sell the debt. You want to find a company with 3 things. You want volatility, massive volatility. You want liquidity. You want to be able to trade in the spot market in order to hedge out your exposure. And you want durability or transparency. You want to know that the company is a going concern, is going to continue. So if you think about companies like GameStop, they were very volatile and liquid, but that trade doesn't go on for years and years. And with our company, we're basically holding a bunch of Bitcoin. Everybody knows we stand for Bitcoin. Everybody knows we're going to buy more Bitcoin. Everybody knows we're not going to sell the Bitcoin. So we have credibility, and we're durable. The S&P index has a volatility of about 12. Gold is 10. Real estate, 18. Apple, 20, 22. Tesla, 45. Bitcoin, 75. MicroStrategy is levered Bitcoin with a passionate shareholder base, 120 to 140, 150 something, but more than 100. Okay, so if you know the Black-Scholes equation, if you plug volatility in the Black-Scholes equation, it makes the option more valuable. Nobody wants to buy an option that has low volatility. So we stumbled on a very interesting opportunity. So they have billions of dollars of capital and they have to invest in an operating company, and we became the most notable, premier, and the most transparent company. You know, with MicroStrategy, we're going to buy Bitcoin, keep it, and try to accrete more Bitcoin per share. There's another class of investors, the Bitcoin maximalists. Would you like to be able to borrow money for 7 years for no interest?
Exactly.
And buy Bitcoin?
Free money.
You would like to, but you can't.
Yes.
But we can. So if you like that prospect, they would buy our stock because they feel like they're along for the ride, right? They're getting advantage of our ability to get cheap capital to buy Bitcoin. Another reason is, would you like to borrow against Bitcoin from your bank? Well, you can't, because the bank doesn't take the Bitcoin as collateral, but MicroStrategy stock is marginable. So you could pledge it as collateral and borrow it at SOFR plus 50 or 100 basis points. So that way you get to keep your Bitcoin and take a pretty cheap margin loan against it. So some people like that. A third class of investors want volatility. There's something called MSTY. It's like an ETF that sells MicroStrategy volatility.
Okay.
It sells MicroStrategy volatility.
Okay.
It generates 100% plus dividend yield. Okay, so if you just sell the calls, you know, you could own the Bitcoin and sell covered calls out of the money or in the money, and then you generate some yield. So some people like that.
Is it issued by you or by someone else?
No, it's somebody else.
Somebody else. Okay.
Other people. But the reason that they do it against us is because we have Bitcoin and we have options. There are billions. There's like $30–40 billion of open interest in the MicroStrategy option market. Well, there are no options on the spot ETFs, you see. So we had this company that was optionable, marginable. It was high volatility Bitcoin equity, but it's also highly levered Bitcoin equity. So Bitcoin would go up and we would go up more. And so if you like Bitcoin, then if you like the idea of taking all your money and buying Bitcoin, you would like the idea of borrowing a lot of money for free and buying even more Bitcoin. And then there are people, they don't even know what Bitcoin is. All they know is they can generate 100% yield, generate 100% yield, generate 100% yield. So what happened then is MicroStrategy stock started trading a lot, billions and billions of dollars a week, and then billions of dollars a day. And then the options started trading. And so then we went back to the market and we did a bond issue, and we did that at 62 basis points at a big premium. So we basically sell the bond for 62 basis points, and then we buy the Bitcoin and we capture the yield difference, or we capture the premium. But then, of course, we basically borrowed $800 million for 6 years to buy Bitcoin. So we did that. People liked that. The stock traded up. Bitcoin traded up. We announced we closed that deal on Monday, and we thought, why don't we just do it again? So we went back and we did it again on Thursday. And we did $600 million on Thursday, and we did $1.4 billion total in that 2 weeks. And why can we do that? Because it's very hard to find a company with 100 vol with billions of dollars of liquidity where you understand the business model. And we built a lot of trust and credibility with our investors because they all know what we're going to do, right?
Yes, exactly.
I'm very famous for you do not sell your Bitcoin.
Yeah.
We're going to buy more Bitcoin. We'll keep buying Bitcoin. I don't mind if you hate Bitcoin. If you short our stock, that just means you're buying it in reverse. Like, you're going to short it now, but eventually you'll buy it later when I need you to buy it. And so what we did is we created an operating company, and we realized at some point, now we're a Bitcoin development company, like a real estate development company. A public company has cheaper financing than a private company because it's more trustworthy and transparent, right?
Yes.
You have to make thousands of pages of disclosures. You're bound by a lot more restrictions. So a public company in America is probably the most trustworthy of a corporate vehicle for issuing security and raising debt. So you would have an advantage if you were a public company and you were doing real estate development. But remember what I told you about volatility.
Yeah.
The volatility of real estate is 20 or 15. you can't sell 100 vol equity and invest in 20 vol assets, because at some point the volatility in your equity goes to 20. You see?
Exactly.
What we were doing is selling the 100 vol plus equity, and then we're buying a 75 vol asset, levering it up to make it back into a 100 vol asset. So if you're actually creating a volatile balance sheet that will drive a volatile stock, that creates the options market, and that creates the opportunity to raise money for less than 1% interest unsecured. So it's appreciating and it's volatile. And most people in corporate finance are taught to avoid volatility. They're taught that volatility is a bad thing. So they get rid of all their capital. And if they invest money, if you had $1 billion on your balance sheet, you wouldn't buy something volatile. You would buy treasury bills. But treasury bills are volatility 5. Like, they're the least volatile thing you could possibly buy. So there's nothing that's going to move. So the result is MicroStrategy stock trades more than all these big large cap companies. So if you have a treasury asset which beats the cost of capital, then it's not dilutive to carry the money, it's accretive. Like, the conventional wisdom is when you sell stock, you dilute the shareholders. But in our case, the more stock we issue or the more money we raise, the more we accrete. And Bitcoin is the first major asset which is accretive. So we turn the entire treasury strategy upside down by actually accreting assets. Today we have $15 billion of Bitcoin on the balance sheet. So we made the balance sheet the primary part of the company instead of the P&L. Everybody else wants the balance sheet to go to 0 or negative, and they want the P&L to be the primary part of the company. When we did that, the volatility of the stock went through the roof, because if Bitcoin goes up and down $2,000 and we have 214,000 Bitcoin, then what happens is there's a $1 billion swing over the weekend. The way to think of it is I'm putting a crypto oscillator in the middle of the balance sheet. It's a crypto engine, right? And the entire crypto economy is driving volatility, and the volatility is driving the equity, and the equity is driving the options, and the options are driving the arbitrageurs, which then are willing to give us billions of dollars of capital for, unsecured, no interest. It's like risk-free, interest-free capital, which then we can invest back in the company to the benefit of the shareholders.